is that regulators have created non-level playing field between mutual funds and ULIP. When you move between equity and debt in ULIP, it doesn't get taxed. In mutual fund, it does get taxed. When you withdraw money from mutual funds, you pay capital gains tax, short-term or long-term. In ULIP, that's not paid. So there is a normal race being run by ULIP and a hurdle race being run by mutual funds. As long as we have products which serve the need of the customers, as long as we have fund managers who can deliver value to the customers, and as long as we have distributors who can carry that message to the investors, I think the future of mutual fund industry is sahi hai.
I think in India, the mutual fund investors, if you see only 2% of the population has been investing in mutual funds. And majority of these investors till now were looking at, either gold, real estate. And when this money, comes into mutual fund industry, even after the LTCG, the kind of returns the mutual fund industry can generate, this 10% does not impact. Mutual fund industry is going to be driving the key change in the Indian capital markets. And now mutual funds is going to, and SIPs is going to become a part of monthly wallet for every Indian. So I don't see a very big impact. A lot of people, intellectual people will keep talking about LTCG. I think it is not going to impact the real Bharat, where that's the audience for mutual funds in India.
Mutual funds and insurance products will always, in a way, compete for each other. And insurance, actually, where it's genuinely insurance, is serving a different purpose. So I think it's wise to actually have some exposure towards insurance as such.
Evidence shows that alpha has been shrinking. There is no denial to that. And I would not be too worried because as mutual funds, like what even Nilesh was mentioning, and it will be wise for us to not position ourselves only around alpha and only around equity as an asset class. But we are a vehicle which gives a window to investors to invest right from a cash fund all the way to international funds. So there's a huge range available.
Globally, in many markets, when a component changes, a constituent goes out or comes in, they calculate impact cost. But in India, we don't calculate impact cost. The index can throw out a company in one day. Can I do that in portfolio? Can index creators teach me how to do that in one day without creating impact cost? I bet none of the index creators will take that challenge. It's an open challenge to any index creator. Please teach me how to change my portfolio without creating impact cost like you do it in index. None will come forward. I can bet on that.
Small segment of investors were self-directed. So you have to serve them. So you have to respond to the market. It's not, I don't think the intention is to create the market necessarily. You could take that view as well. And I actually think some people will take that view. But our position on this is that you can't afford not to respond to the market. Alpha is very hard to come by. I don't think we need to pretend that alpha is a birthright or that we are all going to be able to generate it.
If you're talking of cost coming down, digitalization is very important. It's going to take away a lot of inefficiency from the system.
Present volatility and the increased cost and the tax burden that has been imposed. I'm not really thinking in terms of alpha. I'm just thinking in terms of protecting my portfolio until you navigate this mid-air turbulence. Now, what would you do to save to keep your NAV in check and to protect your portfolio? What would you do?